So much going on today on a Tuesday to open up a holiday shortened trading week that I'm really glad we have a chance to bring in a little expert help to help analyze what we're seeing take place in the grain and livestock markets as well. Let's go right to the phones. Well, actually, let's go to Skype and bring in Brian Hoops. He is the president of Midwest Market Solutions, and there he is right now. Thanks, Brian, for joining us here today. Lots going on. A lot of firmness here in the grain trade, I guess, featured in the soybean market here today. And of course, we have cotton going limit up now. Let's talk about the soybean market here for a little bit. We opened up with double-digit gains today. How come?
Well, you know, sometimes when the news looks the worst, that's when things bottom. And I think we've done that back around the 921 area in November beans. And now we've had about a 45-cent rally since that time frame. And the market's starting to build a little premium into these prices as it believes too much rain in some of the Delta states could hurt soybeans that are a little farther along in maturity. Then you have the rest of the Midwest that looks fairly dry over the next 2 weeks. And soybeans really need another rain shower or two to help completely fill out the pod. And so those two things are giving some strength in the soybeans. Cooler temperatures are forecast for the next several days for beans as well. And if there is a frost or if temperatures dip below what some of the trade expects, that could be also beneficial for soybean prices, not for the yield as it would detract from the yield. But right now we're seeing some good short covering in the grains. Funds came into the week as building a short position in soybeans, and now it's about time for them to start buying some of those positions back.
Yeah, right now November is trading about 17 1/4 higher as we pull up that big board for everybody here. So the future is strong at 966 3/4, within a couple of pennies of our high of the day. Now, we did dodge a bullet, as you mentioned, in that cold weather over the holiday weekend here. Temperatures didn't get as cold as had been feared. A lot of traders said that they thought maybe that would put a little pressure on the market here. But by the same token, we had received word that as of last week, the large commodity trading funds out there had really gone heavily short in the grain markets. And that kind of, I guess, in a way, puts a bullish spin on things, doesn't it, if they're all loaded up on that short side of the boat?
Usually it does. You know, when the trend starts to change like it has in the soybeans, if you look at trends in the winter wheat contracts and corn, those trends are starting to change as well. And so the funds are caught on the wrong side of it. They're going to start buying their way back out of short positions, and that's friendly for prices. So we should see price appreciation. Normally in the third quarter, funds do build a short position. They buy those back as we get into the harvest time frame or in the fourth quarter. And we're in that time frame right now where harvest is around the corner, another 3-4 weeks in a lot of areas. And, that's when the funds will usually start to buy in here, and they may be forced to start buying back a little bit sooner than expected with the change in the technical trends.
And of course, there's a lot of harvest activity already going on around the Gulf Coast region there, and maybe up into the Mid-South in some areas already. And boy, if weather goes downhill like they say, in about a week from now, that could really put a halt to all the harvest activity and could cause significant crop losses there too. Not only on the grains, but on the cotton too. In fact, let's go ahead and run down all our futures prices for everybody right now. We covered the soybeans. Let's go ahead and take a look at corn, where we had December 3 1/2 higher at 358 3/4. Let's jump over to the wheat trade. In Chicago wheat, we have December 4 1/2 higher at 443 1/4. In Kansas City wheat, we have December now trading 5 higher at 443 3/4. Minneapolis wheat, we have December now trading 3 1/2 lower at 628 1/4. Now they continue to back up that spread there that had built up over the summertime. And if you look at the cotton market, we talked about it here for the last hour or so. We've had December lock limit up 300 points higher at 74.88. Can't go any higher than that. A lot of concern about the future of the cotton crop in the southeastern U.S. with the bolls opening up right now, a very critical time. Brian, we'll come back in a moment, and you and I will take a look at our livestock trade and see what's driving that when we come back in just a moment. Well, we're back with you here on a Tuesday. I'm Marlon Bowling with you. I do want to take a look at what's going on with the value of the dollar and the crude oil and the heating oil for that matter, because they have been incredibly important today as well. So let's take a look at the dollar value. Right now, September futures on the index are down 440 points at 92.330, or December futures down 440 points at 92.080. Very significant there. It actually, December actually dipped down below 92 there for a little bit this morning. Meanwhile, on the crude oil trade, I heard this was lifted higher by a big move in the Brent crude market. That's kind of the international standard. Well, this is West Texas crude that we're looking at, and October trying to follow along. It's now up $1.48 today at $48.77 per barrel. However, you take a look at the products like heating oil, and let's take a look at what it's doing. It had been about 0.7 of a cent lower. Now it is finally giving in and trading a little bit higher, but not even a penny, up 0.7 of a cent at 175.4 per gallon on the October contract. So just very slight gains here in the heating oil. That's how they trade diesel fuel in New York on the NYMEX. Just wanted to point that out. Big moves in the crude oil trade one way and the dollar going the other. All right, let's bring in Brian Hoops, president of Midwest Market Solutions, and he joins us from Springfield, Missouri. All right, I want to take a look at the livestock trade. We'll start on the cattle. Here we go with live cattle right now on the board. We are down 65 on October at 104.50, and you have December down 39 at 109.08. So they're back on the minus side again. Feeder cattle side, we have September currently trading at 142.20. That's down 52 cents. October down 85 at 142.70. There a couple of times this morning, Brian, the market on the cattle was trading higher, and it just seems to not get any traction there. It's like it just tries to go uphill, but it can't.
Yeah, it's a tough sled for this cattle market. You know, overall, the news is pretty negative for this cattle, as we have fairly cheap corn prices. We're increasing weights in the cattle market, and that increases our overall supply. And this comes at a time frame when we expect to have about 500,000 more animals coming through the slaughterhouses than what we had the previous year. And so when you combine heavier weights on that many animals, you've got a lot of production increasing over last year. Last week's slaughter about 2% larger than a week ago. So you get some pretty big numbers coming in here in the beef that they're going to have to work through. And so demand is going to be key. And if we could get the weights to start backing off, that would be a real positive for this market.
Does that happen much this time of year?
Unfortunately, it doesn't. You know, right in this time of year, we usually have pretty cheap corn, and that gets fed. A lot of times, a newly harvested crop will get right into the feed rations and fed out. So it's seasonally we do increase weights, and that's an indication of what we do historically.
And I do want to check in before we run out of time here on the lean hog trade. That has garnered a lot of headlines here this morning. Right now, you have the October contract up 265. We're priced at 64.10 per hundredweight. In December, up 227 at 60.32. February, up $1.88 at 64.60. You can tell the nearbys are leading the charge higher. Brian, thanks so much. Good to visit with you again, and look forward to talking with you again soon. All right?
All right, sounds good.
Brian Hoops, president of Midwest Market Solutions. And Christina, here is that proverbial day that we always talk about when pigs can fly. They're trying their darndest today.
A lot of people focused in on your market reports today. A lot of interest.
Hope so.
All right, thank you. Markets editor Marlon Bowling.